Hello all, welcome to my YouTube channel. Here I am going to upload income from capital gain part 6. So this is one of the illustrations regarding to the computation of income from capital gain. Maruti sold one of his residential house on 16/8/2021 for Rs 15 lakh. The house was purchased in 2003 and 4 for Rs 4,36,000. One room was added in 2007 and 8 at a cost of Rs 64,500. Also, he sold the listed debenture of a company on 1/9/2021 for Rs 3 lakh, which were purchased by him for Rs 2,60,000 in February 2003. The CIA 2003 and 4 109, 2007 and 8 129, and 2021-22 317. Compute capital gain for the assessment year 2022-23. This is for your questions regarding to the computation of income from capital gain. Here there are two assets informations are given. One is a residential house, another one is a debenture, listed debenture. So computation of income from capital gain for the assessment year 2022-23. Take first residential house, full value of consideration. That means it's a sales value 15 lakh. So here there is no expenses. So net consideration itself is a 15 lakh itself. Less index cost of acquisition, because this residential house is a long-term capital asset, we have to index it. So this is a formula for calculating index cost of acquisition. Cost of acquisition into 317 divided by CI for the year of purchase. So 4,36,000 is the cost of acquisition into 317 CI for the year of transfer. This 317 here fixed one divided by 109. 109 is a 2004 and 5 CI rate which was purchased this house. So after simplification, the indexed cost of acquisition result is 12,68,000 less index cost of improvement. Here improvement is also be given. Index cost of improvement formula, cost of improvement into 317 divided by CI for the year of improvement. So here 64,500 into 317 divided by 129. After simplifications, this index cost of improvement result 1,58,500. Then taxable long-term capital in case of residential house 73,500 itself. The next asset is a listed debenture. This is also be long-term capital asset. Full value of consideration is 3 lakh less cost of acquisition. So here listed debenture is a long-term capital asset even though no need for indexations. So debenture no indection is allowed one. For debenture indection is not allowed. So only simply you have to deduct cost of acquisitions amount directly 2,60,000. So taxable long-term capital gain in case of listed debenture 40,000. Total in case of asset taxable amount is 73,500. In case of debenture 40,000. Total 1,13,500. So dear students, remember no induction for debenture or bonds. Induction is not allowable to the debentures or bonds even though they are long term. Hence, only cost of acquisitions to be deducted from the consideration. No induction for depreciable assets. Even if it is asset is depreciable, in case of depreciable assets, no induction is allowed, even though it is a long-term capital assets. Net consideration of an asset sold is taken as considerations. and returned on value should be deducted to find out the short-term capital gain. If the net consideration of an asset is less than the returned on value, the deficit should be deemed to be a short-term capital loss. So these illustrations regarding returned on value of the assets or depreciable assets, the question is like that. The WDV, it stands for returned on value of plant A as on 1/4/2021 was rupee 13 lakh. On June 25, 2020, the company sold it for rupee 15 lakh and incurred rupee 50,000 as selling expenses. Determine the capital gain for the assessment year 2022-23. So here asset is depreciable asset, remember it. So computation of capital gain for the assessment year 2022-23. Full value of consideration of plant 15 lakh, less selling expenses 50,000. Net considerations 14 lakh 50,000, less WDV as on 1/4/2021 13 lakh. So short term capital gain for the assessment year 1 lakh 50,000. So this is an important note regarding that. The depreciable capital assets having WDV value, returned on value, are not subjected to indexations, and sale of it results in a short-term capital gain or short-term capital loss, not a long-term capital gain or not a long-term capital loss. Then the WDV as on 1/4/2021 is taken as a base for ascertaining capital gain itself. So here, this is a treatment of WDV assets or depreciable assets. And one more question it is. This kind of question, your 15 marks question can be expected. Shruti give you the following particular relating to the previous year 2021-22. Compute capital gain for the assessment year 2022-23. The first information, she sold the ornaments on 1/7/2021 for rupee 29 lakh, which cost rupee his grandfather rupee 3,000 in 1995. The fair market value of the ornament were rupee 9 lakh on 1/4/2021. And regarding this CI rates in each one, this one here given. Okay, first we have to take first case one. She sold the ornaments, no? So here solution regarding this ornaments. So here long-term capital asset, full value of considerations 29 lakh sales value, less index cost of acquisition. These ornaments are purchased before the base year 2001 and 2. So here CI for the year of base year we have to divide it. We have to consider 100. Okay. So, and one more thing, these assets are purchased before 2021-22. Sorry, before 2001 and 2. So here, a cost of acquisition, we have to comparisons between fair market value or original market value or purchase cost, whichever is higher, that should be considered here. So here fair market value are consider 9 lakh. 9 lakh into 317 divided by 100. Then index cost of acquisition 28 lakh 53,000. So under the first case, long-term capital gain, taxable long-term capital gain 47 lakh. Then the second information it relates to the WDV. So WDV is always it is a short-term capital gain itself. WDV of the machine as on 1/4/2021 was rupee 2,80,000. The same is destroyed due to fire on 15/1/2022. The scrap realized rupee 30,000. The insurance claim amounted rupee 1,70,000. It is the only asset in that block. So this is for your question. So here the solutions for this machinery depreciable asset. So here asset is destroyed and scrap value received 30,000, insurance claim 1,70,000. So full value of consideration 2 lakh less WDV 1 for 2021 2,80,000. So here WDV value is less than the received amount. So here loss, short-term capital loss 80,000. So this is for your second asset solution. Then third one, sold the self-generated goodwill on 10/3/2022 at rupee 3 lakh, which was raised in 2006. So, so if it is asset is self-generated asset, then index cost of acquisition is always nil because cost of acquisition nil it is no. So fully 3 lakh itself is a taxable amount, especially it is long-term capital gain. Then last asset is she sold one of sorry then this one non-listed. Then fourth one non-listed shares which was purchased for rupee 95,000 on 16/4/2021 was sold for rupee 1,35,000 on 2/3/2022. The brokerage paid being rupee 1,200. So non-listed shares, this is also be short-term capital asset because it is purchased 16/4/2021 and sold out 2/3/2022. So it is a short-term capital asset. Non-listed shares, full value of consideration 1,35,000 less brokerage, selling expenses 1 lakh 1,200, net consideration 1,33,800 less cost of acquisition. So it is a short-term capital asset, so no need to inductions. Less cost of acquisition 95,000. Short-term capital gain is 38,800 itself. Then last information, she sold one of her residential house on 16/8/2021 for rupee 18 lakh. The house was purchased in 2003 and 4 for rupee 4,36,000. One room was added in 2007 and 8 at a cost of rupee 1,39,000. So this is also be obviously it is a long-term capital asset. Full value of consideration 18 lakh. So it is a long-term capital assets. We have two inductions. So induction formula we know cost of acquisition into 317 divided by CI for the year of purchase or acquisition. 4,36,000 into 317 divided by 109. So the answer is 12,68,000. Here improvement cost is also be given. We have to index this one also be. Index cost of improvement 1,29,000 into 317 divided by 129. 3,17,000 itself. So total amount 15,85,000. Then taxable, yeah, out of 18 lakh we have to deduct this 15,85,000. Taxable long-term capital gain 2,15,000 itself. So under this case, five capital asset details are given. Out of that, second and fourth asset is a capital asset, and first we have to simplify this capital short-term taxable short-term capital asset or gain. So here, short-term capital loss it is 41,200, and long-term capital assets, first asset, third asset, fifth assets total 5,62,000. We have to set off this loss. So we have to deduct this loss. Well, means total taxable gain after set off of the short-term capital loss, 5,20,800 itself. So today this much is enough one. Please subscribe my channel. Thank you for watching.